Welcome back to your channel. My name is Brad, and today we're just going to go ahead and talk about the markets. What's the potential for the markets going down? We'll just keep on talking, and we'll answer all the questions that come up to the sidebar as we go through this. But let's go ahead and share my screen this morning and talk about where things possibly are going. And we're going to share the entire screen. Yes. So here you go. Right now, there is a... Oh, how about if I put that up on stage? There you go. Right now, next month in October, they're saying 91% chance that there will be rate cuts. And if we take that one farther out, they're really predicting 3 rate cuts as of right now due to the market. We'll see if they really give us 3 rate cuts, but right now we have rate cuts. That is a good sign that the markets will continue to go up. Now, if they're going to hold back on rate cuts, we might see a little pullback in the market. But right now, we're projecting rate cuts. And this isn't me, this is the CBOE watch tool. We'll just go from there. So when I look at the markets, this is SPX, which is really the S&P 500 index. And one thing that I have studied consistently is when the market is above the 20-day simple moving average, the 50-day simple moving average, and the 200-day simple moving average. Well, it might not be risk off, it might be risk on. And we'll watch that. We'll see if it ever pulls back to the 20-day, and it's going to revert to the mean. So I expect it to go back to the 20-day. But when? Who knows? That is a guessing game. I'm going to guess that it is risk on right now. Also, you see the 2 green lines. Let's bring the 2 green lines in focus. For those that are new to the channel, those 2 green lines are SPY eyes calls. You see that they're through both calls now, and this ending line is approximately the day that they roll those calls for the next month. So we'll just be watching that, see how it works. If I go on to the NASDAQ, hey, we got the same thing, right? We got the exact same thing. We look at the 20-day simple moving average. Hey, we're above it. We are moving up and to the right. That's a good sign. On the Russell, hey, that was a local all-time high. If I scan out, right? So we're right back up to it. Depends on what your thoughts are for the Russell. Usually the Russell goes up when there's rate cuts. Historically, that is this as a historical reference that historically the Russell has gone up. And that's because a lot of those companies are not very profitable when they have high interest rates. Then I've asked myself, do I really, as an investor, want to invest in those? I don't know. Maybe, maybe not. I am not going to play the Russell right now. REITs, hey, that's been going really sideways. I mean, we started way back here with NEOS, and you can see their calls over time. We're currently below the calls. On gold, hey, gold has had a big run, and we'll get to that. Sorry about that. That's a little dry this morning outside. Not sweet tea, just sweetener. Well, whatever it is, right? There you have it. So there's where gold is, and we believe that gold is going to be a longer-term play. I prefer 2 funds paying at 11-12%, and they are doing fairly well. But we'll show a chart about that. So BTCI, hey, you can see where their calls are. We're right below it again. So we're collecting that 28% monthly. Just the question is do you believe in Bitcoin? That's all up to you. That is a personal preference. But now we're just going to go ahead and talk about where is these ETFs going? Because it is just getting crazy. I've been tracking this stuff, and it is getting just more and more crazy. I mean, literally, I went out onto X. If you don't follow me on X, you can. And I can't even bring that picture over again. Oh, no, it won't let me do that. Wait a second. Let me bring that picture over like this. I went out to X and I went out and went ahead and trolled them with the new Neos long and short with ULTY and salty. Yes, I did. I am sometimes a troll, but that's okay. It's all in good fun because we like Neos, but they're going to come out with a long and short, and they're going to do put spreads. And it's just like, oh, it's getting more and more complicated to keep up to what everybody's doing. But that's what's going to bring me on to the next tab that's on my computer. If I look at this, this is the new Neos following. They're going to do this long and short equity income ETF. So they're going to be shorting and they're going to be going long, and it's going to be put spreads, and it's put spreads on SPX, not individual stocks, which I was a little, so it's not going to be this great big high yield stuff. But then I go back down farther and I'm looking at this going, oh, look, there's something coming out from Brex. And I said, what's going to come out from Brex? And I go, wait a second, they're going to do 1.25 leverage on Doge and do growth in income. I'm like, come on, how much longer is this going to go? And it is clear that these growth funds and income funds are going to leverage. It is another Rex one, XRP. What can go wrong with XRP on leverage? I don't know. I know that I will not be investing in Doge and XRP. Now, the best part is probably making the wrong mistake, right? I'm probably somebody's gonna go, oh, I made $1 million by doing this. But I'm sitting there going, there is no way in retirement that I can go ahead and reasonably step out and say, I'm going to go ahead and do this and invest in open and hope that makes me a millionaire, because I don't need to invest to be a millionaire. I'm already there. So the question becomes, what are they going to? I mean, Simplify is coming out with a new fund, and it's going to be at 25% target payer. And it's like, are you guys, it's just getting to the point of when are you actually going to get there? And what I'm seeing is everybody is talking about writing spreads, option spreads. That seems to be the new conversation with these ETFs. And they're really looking at put spreads. So the question really becomes now, sit back and go, okay, we're going to do more put spreads, right? Because the new Neo fund with the short and long are going to do put spreads. We got Simplify coming out with put spreads. You got the new one from Defiance doing put spreads. You got Blocks with David Nicholas doing put spreads. Everybody's going to these put spreads. And it's just like, hey, you better be careful, because in a down market, you might not like what your results are. It's going to be as part of that conversation. It is not always this great up and to the right. You got to be careful and actually know what you're doing. So the bigger one is, if you're going to invest in something, actually know how they're generating that income. That's why I kind of stay away from ETFs. I mean, JEPQ, they seem to be doing pretty good. But at the same time, oh my gosh, let's look at my comments. Hey, let's see here. I think you're having an issue with your mic. Oh, no, I don't know. Is anybody else seeing that? I didn't see it. The mic is right here. But if you want to say something, I'm going to watch the comments. So if you still think I have issue with the mic, because I see the little green bar in front of me, yeah, it's a mic issue. Right? Yeah, some static. Let's move the mic. How's that? Is the mic better? Make a comment. Continue to have issues? Let me know. right? Oh, you can hear me swallow. Okay, well, I moved it down. See how it goes. All right, we'll see how this goes. Going to continue to watch the comments about the mic. Next time I won't wear it so high. All right, much better. I greatly appreciate that. Greatly appreciate that. Thank you for the comments, because it's not always the same way every time, because I'm wearing a t-shirt today. I decided not to get all dressed up for everybody, right? But I'm going to go ahead and look at this real quick and look at the charts and give you some thoughts about this, right? This is total returns, T-SPY, SPY-I, GPIX, which, by the way, if you're not in my community, you don't know that I sold that. That's because I moved more into the Qs. That is my personal preference, maybe not yours. But then you have SPY, and you're just sitting there going, the only way something like SPY-I is going to beat SPY is with leverage. They're coming out with those boosted funds at 1.5% leverage. So in an up market, they're going to beat SPY, or at least they should beat SPY. The problem they have with that whole conversation is, in a down market, they're going to go down 1.5 times faster. You sit there and go, man, I hope people realize that these things can really be directional, and you might not want to be on the wrong side of the trade. Just me speaking up about, be careful with these leveraged funds. Roundhill's got theirs, great. Rex has theirs, and we're going to talk about Rex here in a few minutes about their new ones coming out. You just sit back going, be careful. That's all I'm saying. Maybe you just want to stay with the indexes, and that is A-OK. The next one is, we're going to look at QQQI, GPIQ, QDevo, KQQQ against the Qs. If you don't know, I have moved away from GPIX, and I've gone more into QDevo and KQQQ, just like what they're doing. Howard is doing a good job. Only writes calls when the stock is trending downwards. I like that. That's when you should be writing calls, right? These aren't the highest yield payers. But personally, I only need 8% on my cost, and that is where I'm actually going for, 8% of my cost. If I'm getting paid that, I want capital appreciation beyond that. Well, I want a little bit more so I can reinvest back into it, but that's okay. That's why you see me going 12%, 14%. Do I need huge players? Now, I do have a couple themes personally, right? But I just wanted to bring this up. We're just going to go one step farther. Let's go ahead and look percentage price change. I look at percentage of price change, and if you don't know this, every now and then it doesn't do the best on lining everything up to the left-hand corner. But I do price change. You can see where your price change is on the chart, and you can see price change does better with QDevo and KQQQ compared to GPIQ and QQQI. I'm not complaining, because I came up with a rule. This is just my rule. I try not to reinvest now that I'm fully invested in these, unless the price is 3.5% below my cost basis. Because why would I want to reinvest in something that raised my cost basis? I think if I look at QQQI, on some of my funds, I'm like 7.5% above my cost basis. So the market can correct 5%, and I'm still above my cost basis, and I'm still getting my 14% per year, only taking my 8% and being able to reinvest that 6% into something. What it is, I don't know. I like, right now, the gold funds. Matter of fact, I'm going to just go ahead and do that. Hey, you see here, both gold funds up on the screen. Yes, they are. And if you're a fund manager and you want to sponsor one of these, feel free. Right now, I'm just putting them up there because I like both of those funds. But they're going, hey, you want to And that's another one. I noticed this the other day on another channel, and he literally had to post that he does not get paid any sponsorships. And I'll be right out and tell you, no ETF has ever paid me to talk about it. The only person that has ever sponsored a video, it really was that Seeking Alpha. I did join one time on my identity theft that I use, but that's beyond, that's all I do. That's it. So ETFs do not sponsor the screens. That is just my personal preference. Hey, I think it's something fun to do and put it up there. And by the way, I put some lighting in my background, give you something else to look at. But I saw that on somebody else's channel, and I said, that's just a shame that people are literally making those type of comments, because we are not sponsored by anybody. If you want to sponsor me, feel free. Now, then I'll have to put a little tab in, but till then, hey, there you have it. Look at this. Well, back to the Qs. Now, what's the next one I want to talk about? GPTY, because I believe in AI, and that was just me. And I put it up against the Qs, and you can see that, hey, I am doing better than the Qs. I also have NVII from Rec Shares. And I just look at that going, NVIDIA is something that I believe in personally. So why not make a little bit of money off of NVIDIA, and it's going to beat the Qs. So you know that's beating QQQI just in the whole gamut of things. So I just sit back and go, not bad for what Brad is trying to achieve, taking 8% of his account. And by the way, I've been retired now for over a year, and my account is bigger than when I retired and started living off of it. Yes, we've been in a bull market, and yes, we have seen some downturns and upturns, but right now I can totally confirm that my account is much larger today than it was the day that I retired. That's just me. Now, the last one I'm going to go into is gold, and then we're going to get to some of the comments on the side. I believe you should have a little bit of gold right now. I think it's the right thing to do as a diversifier. I look at GLD, which is gold, right? And I look at the NEOS funds, and you can see how they're doing. Now, GLDI is a ETN. And like I expressed, I don't like ETNs that well because I can't see what they're doing. If I can't see what they're doing, you are going on blind faith that they're doing the right thing. So I just got to call it. I like to be able to go out and literally look at what people are doing so I can have a lot more confidence in what they're doing. But if I take just a gander at this and I bring it up on a chart, and we're just going to take it one more month so everybody's on the same playing field, I put it as KGLD is doing fairly well, tracking very close to gold. Then you get IAUI, and it's doing well, and they're both paying that 11 to 12%. And then you got GLDI paying less than everybody else and seems to be falling behind a little bit. It's just my personal opinion, and don't get offended. Maybe GLDI is the way that you went with it. But remember, what I keep on trying to say is I have both. Somebody on Twitter, this one's better than this, and this one's better than that. It's just like, really? You can't own both? Don't know how to own two funds? You can only hold one fund? Just making fun of you a little bit, going, man, you're scaring me that you can only own one fund. I don't know. That's just me. But hey, I am going to go take a quick look at AI. I brought up AQ the other day. I said, okay, let's see what they hold. And I looked at their actual holdings and I said, very interesting. I like those. They hold coin. You can see Apple, you can see Amazon, right? Then I go and I look at AIPI. And you can do this for yourself. You can literally go out to their website and see what they're holding. And I said, that's interesting what they're holding. And you can cross-reference this with AQ. And then I went to FEPI and I said, hey, let's see what FEPI's holding. And I can look at that and cross-reference it. I can look at GPTY and see what they're holding. And I can reference that. Then I can go down my list and say, wow, everything on my list, or a lot of things on my list, actually fall into other people's lists. Okay. Then I can get to rec shares. And I can go down the complete list of rec shares. Now, this should be coming out. Should be. I don't know. I don't work for rec shares. I don't have any insider information. But you can have all these new funds right here in column K. And if you don't know, this is for my members of the community. You can literally go to tab 8. You can see my holdings and everything else, but you can go to tab 8 and look at rec shares. I will be adding each one of these into rec shares. Just throw it out. I think rec shares is doing a good job, and I'm going to put it in my AI. I am going to go ahead and share this just because everybody always wonders, what do you have invested in what? I have 48% into equity cover calls. Now, AI is, again, equity cover calls. BDCs, preferred stocks, gold and silver, REITs, master limited partnerships, and senior secured loans. Just thought I'd share that, where my actual percentages are, because everybody wants to know, how did you break this up? And I just wanted to share that real quick with everybody. Anyway, we will go ahead and stop talking and move over to the screen over here. Bring it over here because I always like looking at the screen. And let's go through the comments real quick. And we're going to say happy Sunday. Happy Sunday back to you, all right? Really appreciate all you do for us. Thank you. Really appreciate it. Okay, Clint, got the mic issue. Thank you. Moved it down. Appreciate you. By the way, he's a member. He can probably testify. I actually go out every single day and post on Circle. Tell you where the market is, where it's at compared to the moving averages. I also use point and finger, MACD, RSI, just to give you some other indicators, right? Just to tell you, hey, this is where it's going. Yes, another member, right? Woohoo, made it to it live. Yes, thank you. Here is the first little mic issue. Greatly appreciate it. Guten Morgen for my German speakers. Although I know John does not speak German. Well, he might, but I know he's not from Germany. All right, then. Professor Brad, right? Gracias. Thank you. I like that we're getting more and more tools for income investing. Yes, I like the tools. I like that they're using more and more strategies. I just don't necessarily think that everybody should be running in trying to leverage up. And it really gets very tiresome or worrisome, really. I'm going to leverage up on my brokerage account. I use leverage. And I'm going to use leverage on top of leverage to leverage up more leverage. That is not probably what you should be doing. Just saying, be careful out there. I don't want people to get into stuff that they don't know what they're getting into. And when the market takes a big move, wrong direction, leverage on top of leverage might not be what you want to be in. So just be careful out there, right? That's the whole message. Head and shoulders pattern on BTCI. Yes, let's go ahead and say, I think Bitcoin will eventually break a little farther north. But I also think, just like I'm preaching about leverage, that somebody's going to put too much leverage into it, because that's what they always end up doing, and we're going to see a pullback when they get margin called. And you just sit back and go, I mean, I follow somebody that talks about the billions and billions of dollars people losing on margin calls. And it's just like, I hope you guys are recognizing that using margin correctly can greatly help you, but using margin incorrectly can really hurt you. Just put it out. I commented on the X post. Yeah, I'm sorry. I couldn't help myself, right? I couldn't help myself when I saw that. And by the way, I used Gemini AI to create some of this, like these two here. And that's actually kind of funny because I had to do the inverse of both because it's a mirror when I'm talking to the screen. So, hey, again, somebody wants to sponsor these, go ahead and let me know. All right. I think leverage income funds is the only way to capture the upside. Yes. I'm not going to disagree with that. I think in a upwards trending market, leverage funds can do very well for you. I really do. I really do. It's the downward trending that I'm sitting here going, whoo, wait a second, people. Recognize that if the market goes south, your account is going to go down south faster. Just thought I'd throw it out. It's going to go down farther faster. Now, some people, I mean, I was in Bitcoin. Volatility, come on. Seeing 80% downturns, crypto runner, hey, losing all your money going, oh my gosh, I want to not be able to retire forever, right? I lived it. So go ahead and just remember that. I think that leverage funds going the right directions could be a good play. And there's a new one also from Roundhill going to come out eventually, and it's going to be 1.2% leverage on SPY and the Qs. So even if you're more like me into conservative, not picking your own stocks, you can get a leverage fund like that. Just be careful, right? Pick your stocks. Just throw it out. All right, I'm about halfway there, 39. And if you're there, great. If you're not there, there's a lot of people that are using income for a lot of different things. I'm going to use an income fund to pay for my car. I'm going to use an income fund to pay for my car insurance. I'm going to use an income fund to pay for my groceries. I'm seeing more and more of these comments, and I get it because the cost of living has greatly increased. We won't go into the cost of living and everything, but hey, you really need to consider that, especially when you're getting closer and closer to retirement, is cost of living. Do you really need to have the cost of living taxation of California because you like the weather? I think I was covering California and I used to go there a lot with my job, that they called it the weather tax. They're taxing you because they have good weather. There's other places in the nation that are very nice to live at that may be a better retirement plan than others. But I get it. You have family, they're in California, you want to be close to them. So I get wanting to be close to those people. Are these new funds going to drive the direction of individual stocks? No, it's actually good. It's actually a good question. It can actually hinder the direction of the new stocks. If you didn't know that, options and how options are actually written can be a hindrance or it can help. If they're shorting a stock a lot, it can actually cause it not to be able to go up and appreciate in price because the market makers are making it that way. Just throw it out. These don't always force a stock to go one way or another, especially if it's all synthetics. And I'm not going to get on my horse about synthetics and not investing in synthetics because I have some synthetics BTCI is 3/4 of a synthetic. Biddy is 3/4 of a synthetic, but they hold HODL is 25%, and they don't write on those 25%, so they actually hold Bitcoin. I think I pointed this out on X the other day. You know, Neos and the BTCI fund has like 1,029 or something like that worth of Bitcoin. 129 Bitcoin, 1,029 Bitcoin is the number about a month ago of how much Bitcoin Neos actually has in HODL inside the fund. So I like that. That helps the fund force the direction of something like Bitcoin because it actually holds it. Now, funds that don't hold SPY or don't hold the Qs, they are not investing in those individual stocks. So that's not really investing. You're really harvesting the income through the synthetic. I hold NVII. NVII is synthetics and writing calls. They hold no NVIDIA. It's not investing in the underlying. So just keep that in mind. So it's not really investing in the individual stocks. So just point that out. I think we more upside than a call spread perhaps, but the downside is still open. Well, not 100% because they actually are buying the put. So they sell a put, sell put and buy put. So yeah, you lose this, right? And you actually lose it at a faster pace in between. But once you hit this, it negates the put, right? And then you only have the downside of the actual stock. So yeah, puts. But I noticed that Neos is going to it. I noticed that Defiance is going to put spreads. Blocks is using put spreads. But yeah, in between the gap, they'll go down faster. But once they hit that buy, then it, yeah. So buy. Yeah, it'll go down slower, right? And it's not a collar, right? It's not like it's a collar for say, right, where it's down, protecting the downside, right? I think you have an issue with Mike. Yep, thanks. Forgot the cheese spread to go with those puts. Thanks, John. Happy Sunday. And I'm just going to go through every one of these. Right, and I'm going to say, hey, there's some static. Yep, thank you. We got the mic fixed. A little choppy audio. Got that one done. Put down a little lower. Right. All good on the mic. And I think this is much better. Sounds good. I'm going to stop going through there. I'm going to go ISO put spreads to generate income for clients on FA years ago. Ended up very badly in 2008. And that is what we're actually worried about. Is something like a 2008 happening? Right now, do we see a 2008 coming? We know that they're keep on investing in AI. Is there an AI bubble? I don't think that there is. All indications, according to Roundhill, actually, they wrote an article out on their website. You get a chance, go to their website and read their blog. I don't invest in a whole lot of the Roundhill stuff, but hey, they got a blog. They do a pretty good job of telling you, hey, actual AI spending continues to go up. So that's a good sign. There was actually a little drawback in AI spending, but that infrastructure is still being put out there. 12 minutes in, and Brad finally fixed the sound. CLO coverage. Yeah, let's talk about CLOs. CLOs are going to get demolished. Okay, anything that you're not going to invest in right now is probably a collateralized loan obligation. So, hey, I'm going to take a bunch of loans at a higher interest rate, and I am going to go ahead and use 50-time leverage on this, and then I'm going to go, oh, the interest rates just went down, and now I'm going to have to do this whole consolidation. I'm not going to probably be doing the best, especially some of the equities. Now, the equity companies will do better. Let's just go ahead and say I'm not going to get myself into CLOs. Actually, I got out of all my CLOs. I still like JBBB and clause in ETFs, and but I did keep my FESCO, which does senior secure loans, pays 11%. And that's how I actually balance out my fund. Really want that 60% equity, 40% something else, and not bonds, right? Business development companies, cash, senior secure loans, stuff like that, that has a very steady income section. And then I have my equity section, gold, Bitcoin, and it's all in there, right? A lot of it's cover calls, and really get into that sustainability of cover calls, right? Just keep that in mind, right? It's not always up and to the right. We can have a drawback, just like we did, like this person said in 2008. Trying to avoid that. And I have a plan. Do you have a plan? I have a plan. My members know I have a plan in the back of my mind. I know what I'm going to end up doing. And buying a put. Somebody goes, oh, all you got to do is buy a put. Well, guess what? Buying a put doesn't generate you income. And as the funds go down in price, so does your income that you're trying to live on in retirement. So just buying a put will protect your capital, but does not protect your income. Just keep that in mind. And do you have a plan? Because buying a put is part of mine, but also I've looked at other things that can generate me income in my retirement. So I don't have to take a pay cut. Right? Oh, coffee. Everybody has coffee, right? Already had my coffee. Anyone know when the boosted? Well, okay. So if you go out and go find them and find those SEC, what do you call them, filings, when they follow those, it's 75 days from when they filed for the funds. So you can go figure that out, right? That's how I know that Rex is going to probably come out next month. And even after the filing is done, they don't have to launch the fund. We saw that with TDAC, right? We saw that with the silver fund from Curve, right? I think I've been trolling people on the silver fund too, out on X. I can tell you that I believe very strongly that that silver fund from Curve is going to come out sooner than later. I'm going to go ahead. I will take a bet, if anybody that wants to take it, that the Curve Silver Fund comes out before the NEOS boosted funds. That's a pretty safe bet for me, because not that I have any information. I just think that the Curve will come out with it first. Thanks for letting us know about Eggy. Yeah, actually, I was doing an X Space, and the CEO of Tidal came on and was impressed that some of us, me personally, was actually talking about Eggy and EggQ, because those funds don't get a whole lot of coverage, and they're actually doing fairly well. So you sit back and go, if you're an income investor, but they're hand-picking those stocks. So keep that in mind. Go look at the holdings. If you like their holdings, not bad. I like the holdings of QDevo. I like the holdings of AQQQ. And they do a good job. So keep that in mind. The pictures are mirrored. Yes, the pictures are mirrored, right? Should be. Okay, you let me. So when I look at the screen, now I'm looking at the screen my way, they're correct. But maybe I'm going to have to get back to the video and say, man, did I screw that up? But anyway, yeah, I actually took them and mirrored them, right? Just let me know if they're screwed up. That means you're doing it right, probably. How about Bitcoin and gold? BTGD. Now, they just came out with options on BTGD. The problem with BTGD for me is it doesn't pay me income. But as a fund, it has done extremely, extremely well. And if you don't know, $1 gets you $1 of Bitcoin exposure and $1 of gold exposure. And once it becomes out of balance, they rebalance. So as gold is going up, they're taking a little bit of that gold money and putting it into Bitcoin. And when Bitcoin goes up and it's out of balance, they'll take some of that money and put it into gold. It is a very interesting fund. You should check it out. I actually had the fund manager on, and he was on an X Spaces with us not that long ago. So a lot of these fund managers are showing up to the X Spaces. Howard from Curve showed up to the X Spaces. Sometimes the X Spaces aren't overly exciting, but it's nice to see the fund managers come out. And talk about X Spaces real quick. On 1 o'clock on September 23rd on Wolf, Neos will be out on X Spaces. Just to let you know, if you want to hear, I think it's going to be Troy talking. So keep that in mind. But BTGT, something you should consider. Now, also in my portfolio, I went to Fidelity Baskets. Yes, I'm using Fidelity Baskets because I became lazy. There you have it. And that's it's on this whole fund of funds. Hey, I can create my fund of fund myself inside my baskets and hold exactly what I want. And then every month, if I want to, I can hit the rebalance button. And it, poof, does it within about a penny of each other. It rebalances everything for me. But then again, I'm in an IRA and a Roth. You might want to consider hitting that button a little less if you're in a brokerage, because you're going to create tax events, right? Yes, talk about BTGD. Good fun. Really is. They're doing the right thing. Now, it does hold future contracts. And if you've been following me, not a big fan of future contracts. That's just me. Rex shares growth and income will be the center of my leverage position. Yeah, I think so. I can tell you that front and center, I like what Rex shares is bringing to the table. One, they back tested it. That's a good sign. I've talked to the Neos guys. I know Neos is back testing in their strategy. And that is another good one to hear from the fund managers actually back testing this stuff. This is saying, hey, but it's going to go out and sell options. Good luck. I know that the fund manager from Biddy back tested because he sent me his back testing. So that's why I hold Biddy as part of my Bitcoin holdings, because I've actually seen his back testing and how he back tested it. He might not share that with everybody, but he did share it with me. So I said, okay, you did back test it. All right. Growth center. Yep. I'm building only leverage right now. Yeah. Well, you are younger, so you can recover if the market goes down. What are your thoughts on ULTY? And I even said this to Yield Max the other day. I don't like ULTY. I don't like it. No. I don't like all the underlyings. And even Yield Max said, well, you don't have to invest in it, because if you don't like the underlyings, you probably shouldn't invest in it. Say, but like this, if you don't like this nuclear power plant stuff, everything else they hold in there, you just sit back and go, do you really, really think that you should own it? And I'm just going to bring up a chart real quick. Let's go ahead. Let's take a quick look at this. All right, and we're going to change that date just a little quick. All right, and we're going to go ahead and present my screen. And lo and behold, 6-month test. Yeah, GPTY. Huh. My pick just happens to be ULTY. There you have it. two funds has the ability to use the same option strategy, both paying weekly, but I prefer the one that I like the underlyings and I don't mind holding the underlyings. I think that is something that you have to really consider when you talk about ULTY. I think you want risk, and they're going to pick a fund that they're going to pick a stock that you may or may not like. Now you are a holder of it technically, and they're writing options on it. So pick the funds that you like the underlines. That's just my whole thing. Obviously, GPTY, according to the chart, looks like it's doing just as good as ULTY, but I like the stocks in it. Just thought I pointed out. Good morning to you also. Brad, man, thank you. What do you think of QDTE and XDTE as you don't take all the distributions? Well, since someone had asked, and I'm only going to bring this up because someone asked, right? Because I stopped talking about these funds just because. Let's see here. Let's do XDTE, right? And we're going to do SPY, right? Because that's technically what it is. All right, and we're going to let's throw another fund out there. I don't know, T-SPY. I love T-SPY, right? A little more conservative, all right? And we just put it like this, and we put we're going to put the 20th, so the dates go. Again, only making that so the dates are down there. All right, here's the charts. Who's doing better? I think it's still good fun. They're going to have a couple issues. Issue number one, mark to market. They did not do a heartbeat trade. They rolled those calls. And what I'm talking about, they had poor man cover calls, long dated puts, leaps, whatever you want to call them, because somebody's going to try to sit there and try to correct me. They did not heartbeat trade them. So that means they must, a little bit, they must pay you 90% of all the gains of those longer dated synthetics. It's a 1256 rule. Sorry, they're going to have to change something. It's a RIC rule. 90% is a RIC rule, Register Investment Company rule. So at the end of the year, what I said at the beginning of the year was this is their cost basis, and any price appreciation that comes into those longer ones, they're going to have to pay you out. Now, did I know that at the time? No. That's probably part of the problem. Nobody was talking about it. I just happened to talk to a bunch of different fund managers, and they go, well, you can actually do a heartbeat trade and not have to pay out those gains. Okay. How do you know if somebody heartbeats traded? Well, the day that they heartbeat traded, their shares count will double. Really? Why is that? Oh, because they're going to actually, like a heartbeat, double the share count because they're actually just doing an accounting phase. They didn't do that, so they're going to pay you out all the gains of the actually longer dated calls. And as the market continues to go up, that's what they're going to do. Now, I don't have a problem with it if that's what you want, but I'm going to just do one more little thing and go price change. You're seeing that XDTE has really became stable in their price. I like that. I think that because they are going ahead and paying you out part of those gains. They're also netting any of the losses of their trades. That is very important. So on the back side of this, I'm sitting there looking at XDTE myself going, wow, in an up market, this might be a good fund to actually hold because they're paying those extras out because of the gains. But in a down market, you don't have any cushion. You're going to have to roll out. And when I'm talking about down market, I know most of them, okay, most people, you can make a comment. How many people remember Black Friday of 1987? Black Friday. Caught you. Black Monday of 1987. You better go look at it. Oh, I'm going to hold XDTE until you hit Black Monday of 1987, and you're going to be going, I lost how much? Do you remember? And this is going to be for the older folks. All right? This is going to be for the older folks. Do you remember the traders jumping out of windows in 1987 and committing suicide? Do you remember that? I remember that. I remember that. I can remember exactly where I was in New Jersey at a beach, working on a beach house, and hearing about traders jumping out of the windows in New York, doing suicide because of how bad that day was. Are you ready? Are you ready for that day? That is my question. You can take it or leave it, but professional traders jumped out of the window in 1987. Most people that talk about this stuff weren't even around to remember traders jumping out of the window in 1987. That's something for you to think about, right? Anyway, XTT, not too bad. It's getting better, and I kind of like it, but going to down market, it might not be doing so well. Hi, Mr. Brad. Nice to meet you. Please come on. Granite shares and yield boost. Okay, Grant will be coming onto the channel. Granite shares. Now, Granite shares, if you marry it to the underlying, you don't have to have a large portion of your actual holdings into something to generate income for you. You don't. You really don't. You can actually put a very small portion in and generate a high yield, right? Very high yield, and get your income that you need, and then have everything else in SPY or Qs, or even, shoot, you could hold your money in a money market account. I don't care what you do with it. You don't have to worry about the actual ETF eroding on you. It erodes because of how it's actually structured, but you can actually have a very small portion and think of it like an annuity, right? I don't know. We'll get, so I'm going to just leave it there. Granite shares and will be coming onto the channel again. Just throw it out. And I think that if you know what you're getting, you can do this, right? Is this live? Yes, it's really me. It's right here live. At least I am live, or if you're up to the date. What I find interesting is young people jumping in an income investing craze. I asked them, how long have they been playing on retirement? Some say 20 to 30 years. Now, again, I've said this before. Until I met some of these younger people and understood how they're using income, I get it. I mean, I'm friends with the guys over in England. I do plan on going on their channel and talking with them. He wants to make an extra £2,000 because of inflation and because that is his strategy. And everything else he is going to put into growth stocks or growth ETFs. And I get it, because those 2,000 pounds helps to pay his car and his rent. And I get that. That way he can live a little bit of different lifestyle. And I fully appreciate that. I really do. I really appreciate that these people are thinking that way, because really gets into this. Can you create a lifestyle for yourself using income funds younger? I don't highly recommend it, but hey, I'm not in their shoes, and you shouldn't judge them either, because maybe their life circumstances are to the point that they need a little additional income. Maybe they make $75,000 a year, and that doesn't buy you a whole lot of a house today because interest rates and where the house pricing is. But hey, they put stuff into an income fund, and now they have more income so they can afford to buy a house. And I greatly appreciate it. Thinking out of the box for some of these younger folks and doing stuff like that. Good morning, health and wealth. There is my Canadian friend, health and wealth. Hey, there you go. Say hi to your wife. Very nice lady. He's going to be successful because she will make him be successful. There you have it. Right? Can you talk about blocks? What kind of potential downfalls does this have with the crypto winter? Well, it's all about your thought about when crypto winter is coming, because they do have Ethereum and they do have Bitcoin, and they are heavily into the miners. All this stuff last crypto winter went down like 80%. So don't forget, there is risk, a lot of risk, because if you are on the wrong side of that trade, it's going to go down like a rock. And I don't care what they do, but spread that I'm going to do. Lots of risk. I have a small portion in blocks. It's paying 36%. They're doing options and making about 50, and they're netting out that 14% and putting it back into the underlines, and it's going up in price. But will Brad be reinvesting a lot of money back into blocks and growing that out, making a huge, taking some of that income and buying something like BAR, which is gold, unencumbered, with no options on it? There you have it. And I put, that's another one. All my income now, I put money into stuff that is not capped. So I hold QQQM in my income basket, and I can hit the rebalance button and actually balance that out. And that helps me get away from anything that's not keeping up in price. I also bought Bitcoin. I also bought BAR, which is gold. I also bought the new REITs one from State Street, but I also bought the unencumbered one from State Street on their REITs, right, as a basket. So I don't have to worry about if there's NAV erosion, because the one that's 20% that I hold that's not written on can go up in price, and I can just balance it out. Now you can say, oh, well, you could have done. This is just how I'm doing it, just balancing it out. So hopefully that answers that, right? Generally speaking, if we're at market highs, doesn't it make more sense to hold YQQ instead of going long in the Qs? Well, there you go. Well, okay. No, because if you go back and look at history, when we're doing rate cuts in stagflation, the market goes up 14 to 15%. So no, you're on the wrong side of the statistics of which way the market moves when we're at all-time highs. I keep on trying to tell you that, but you keep on going, YQQQ, which, by the way, is a very good fund when the market is going south. Market goes south, you might want to look at holding YQQQ. But when everything else, and I'm going to just point to this book, and he If you think you're better than the professional traders, you think you're better than the professional traders. They literally tell you in the book when it's above the 20, above the 50, and those are both above the 200. It outweighs any sell signal. Professional trader. Obviously, you're better than a professional trader. Because professional traders say, and he's using TQQQ and beating the market with a 3x leverage fund. He's not saying, oh, you should sell. No. He's looking at indicators. Matter of fact, same indicators that I'm looking at to tell you, hey, when you should be buying into YQQQ. And it does have a good place in people's portfolio, just not when the market continues to go up and to the right. SPY, QQQ, BTC, GLD are all overpriced at the moment, in my opinion. They're due for a correction. Why? Please explain to me why you think it's due for a correction. Why? I love how people put out their opinions with no data to it's above the 20, above the 50, above the 200. Now, does it pull back to the 20? Very well could be. But people saying, hey, it's going to crash. Well, really? Under what? Why? Because M2 money supply is going down, just like it did in 2022? No, M2 money supply continues to go north. What's the reason you think it's going to go for a correction? Somebody buying and selling? What is it? Companies not reinvesting? Companies laying off employees, becoming more profitable? What is it that you think is going to cause that correction fundamentally in the market? That's my question. Because it could. It very well could be. Not saying anything's wrong. Just why? Blocks versus BTC. You're trying to, why? Here's why. Why are you trying to pick which one's better? Why didn't you hold all three? Why? I didn't want to buy one fund. I'm only going to buy one fund. I'm literally making fun of you. Why not hold all three? If you believe in Bitcoin, why do you have to, people say, oh, you only need to hold one fund? I literally didn't go, why do you want to hold one fund? Why don't you hold all three? All three uses different strategies. Just throwing it out. Please don't say, I only want to hold one fund. Okay. I hold 3 funds. I hold 5 funds on the queues. All 5 of them do different strategies. Okay, just sitting there going, right? On AI, I got GPTY, I got new rec shares. I'm having multiple. I actually hold chat as something that's not capped. Why? Base everything and put it into one and say, I'm only going to hold ULTY. Trust me, I see them out on X, right? No, before you go, the leverage, no crying in the casino. Of course, yeah. There you go. Health and wealth, my Canadian friend. Oh, thank you very much. Greatly appreciate it. Always greatly appreciate that. Which identity theft protection do I use? I use Aurora. Just throw it out. That's who I use. They do a pretty good job. All right. Oh, I did a sponsored video way back in the day, but hey, I just use those guys. Your screens behind you are reversed. Huh. And I went through the trouble of reversing them the other way. So next time, I am going to go ahead and make them regular. I thought that because of mirrored, because when I look at my screen, they're correct. Maybe I need to fix it. We'll get there. All right. Just answer that one. Are the new BS funds similar or the same as hedged funds are you talking about? Please go read the prospectus yourself. It is not hedged funds. Not hedged. They will not hedge the downside. They're good funds directionally going up. The hedge funds are SPY H and QQQH that has a hedge for downside protection. So I'll throw that out. I'm using AIPA to pay my car insurance and my utility bills. Exactly. What's wrong with that? What is wrong with that? Nothing at all. I get where he's coming from. I'm seeing more and more of this from people. And I can understand that people are doing this. That's why I'm not going to sit there and say you shouldn't do it. I am taking my NVIDIA monthly distributions and buying more NVII. Well, that is one way of doing it. I moved everything into NVII. I just like what they're doing. Right? Hi, Brad. I'm very interested. I'm very excited at the leverage funds. I think they would do well. I think they would do well in a up market. And I will buy probably the QQQ version, QQQI boosted, if the 20 is above the 50, 50 is above the 200. But as soon as it's going south, it'll be the first fund I sell. Maybe the second fund. It's just how quick can I hit the sell button, right? Good stuff. I have clause. Yes, clause is a good one. And PAAA. With the interest rates going down on secure overnight funds rate, you're going to see their payments go down. There's nothing wrong with clause, and you got to stay away from the bottom tranches right now, my personal opinion, and stay with the B being the bottom of it, and maybe some BBs. If you don't know what we're talking about the ratings of these, and stay with the clauses and the JBBs and funds like that, right? Love these videos. Well, I love you guys showing up. Man, it's not a comments today. Right? Totally agree with Brad about ULTY. Massive NAV erosion. Well, I'm not too worried about the NAV erosion as I am actually what they hold. This is my personal thoughts on Biggie. Wow, that's a good one. Biggie does fairly well, actually. Doesn't do as well as others, right? This is a yield max fund, pays 12%, right? But it does fairly well. And I'm going to just put it up against SPY, right? And I am going to do max. Wow, there you go. Haven't looked at this in a long time. Let me go ahead and move this over here, and I am going to share my screen because somebody brought this up. There you go. Biggie appears to be beating SPY. Pays 12%. It's a yield max fund. Not bad. Not bad at all. And by the way, somebody did the whole Eggy thing with me and pointed that out on last week's, right? And you can actually look at Soxy. I think another one, Soxy. I like Soxy. I think that's another 12% pay, right? On semiconductors. Oh, look at that. Talking about trying to beat SPY. Totally beat SPY. There you go. Soxy. There's another 12% payer that you can actually beat SPY, and professional fund managers can't even do that. Here you can collect 12%. Now, question is, how are they doing on NAV? That's just me. All right. Price change. I'm sorry. Soxy, price change is doing better than the SPY. Okay, come on now. So somebody screams NAV erosion about yield max. Obviously, they're not looking at. Oh, I'm sorry. I did Biddy. I'm Biggie. Oh, man, maybe I have to take this all back. All right. Total returns. And I did year to date. Oh, no, okay. I'm good. Still good. Woo-hoo. So total returns, Biggie is beating SPY and Soxy's beating SPY. So, beats a spot. I actually did Biddy. So probably somebody pointed that out. So both of these are from Yield Max. And if you look at price change, right, you're not seeing a whole lot of NAV erosion. So there you have it. There you have it. I would say if you're into, I pointed this out before, if you're into semiconductors, you might want to think about Soxy. You might want to think about Biggie. 12% payers. I think the market generally gives up 10 to 12% a year. 12% payer is something that's probably very consistent. Just don't go ahead and go all in. But there you go. Wow, I just moved myself over there. All right. There you go. All right. Hey, do you see my previous question? Well, I thought I've gone through each one of them. Like it was optimal. I may have missed something. I don't know. Did you say I didn't see a question from you before? All right. I want to say I'm not going to go back. Sorry about that. Trying to get through everybody, but I remember the suicides. It was all yes. Yes. In 1987, another one. They remember these things. Right? I mean, this stuff out there. They actually changed the building code of the windows because of this. I'm telling you, people weren't around when this happened. And if you're younger, you might want to go back. And that's why I'm a little more protective because I actually remember this, right? Right? Wave to the working investor. I do believe another YouTuber, if you want to go watch him. Thoughts on Cornerstone. Don't do Cornerstone. Don't. This guy, there's a whole conversation on the X Spaces the other day. I don't like a whole lot of closed-end funds. If you're going to play closed-end funds, CEFS. It's a ETF. It's a fund of funds, and you have a professional picking yours, getting you in and out of the closed-end funds that are going to go up and down. So my whole thing on Cornerstone, every time that they can't make enough money to pay you out more than they actually make and are going down, they have a rights offering. And if you're on the wrong side of the rights offering, you're going to lose money. Should be studying this. This is a fun. If anybody wants to talk about NAV erosion, do you believe they started it at $198 a share and they're down to $8? No NAV erosion there. But because they sell at a premium and they drip at NAV, you can gain a whole lot of extra income. A lot of people are into it. I am going to choose, I'm not going to be stressed if I'm going to be on the right side of the rights offering or on the wrong side of the rights offering. Even though the guy's on Seeking Alpha, and it's, I forget the guy's name, they tell you which side you should be on depending on the premium. So I'll throw that out. I'm focused on T-SPY, TDAC, Omaha. Omaha, still not jumping into that, right? BTCI and GDXY, which is the gold miners, right? That has done pretty well, but the NAV is going down a little bit. But looking at total returns, I think it's doing well. Bar on my list, yeah, it's just instead of holding GLD, it has a lower actual cost of ownership, right? Its expense fees like 0.17 or something like that. And that fund manager used to run GLD. Just thought I'd throw it out. He actually knows what he's doing. Eggs has hedge, protection, puts. Yes, it does. Blocks has some hedge. Yeah, okay. They're doing, we'll just go like this. Yeah. They're doing the iron condors. I don't know. I have to get a look at that. If they're doing iron condors, they're going to get in trouble because that is not in their prospectus. Start throwing out. Nope, not in their prospectus. They better not be doing iron condors. Now, unless they're doing it as separate calls. They could probably squeeze that in, but no, 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 no. It's not in their prospectus. People can get in trouble. And iron condors, I know for a fact, it's not in their prospectus. Right? Thoughts on floating? Oh, yeah. Okay. Yeah, whatever. Right? Clause compared. Right? Okay. Not even going to go down that road because I'm going to have to go look this stuff up for you. I'm just telling you the closed-end funds. If you do not read the quarterly reports, can analyze the quarterly reports on every closed-end fund that you hold, you shouldn't hold it. End of story. If you're not doing that, you're not investing, you're guessing. Right? I've been doing great with GDE. Yeah, okay, right. Oh, whatever. All right, come on. Hey, I'm going to go like this. Oh, I invest in XYZD and EIUE. Almost says, I don't have time to keep up with everybody's investments and everybody's funds. I greatly appreciate it. Thank you for sharing, but I have no clue what you're talking about. All right. What's the difference between hedge and buffered? Again, I'm going to have to take, don't have already been over an hour and 15 minutes. I'm not going to sit here and tell you, if you don't know the difference, don't invest in them. How's that? Because a hedged fund, right, has some type of protection for the downside. Buffers, if you buy on the day that it's issued, has buffered protection to the downside. Now, if the market goes up and they say, hey, we have a 30% buffer, but that was on this date and you buy it at this date, now that buffer has a 40% drop. And people aren't going, yes. And there's another one out there called boomer candy, right? If you don't know what these products are and can explain them to other people, then you should not be buying them. If you're asking me, you shouldn't buy them. That's my content. That's my comment. You shouldn't buy them. To answer why the RSI is overbought territory. Okay. At least somebody has an answer why, right? And because the TD central indicators are screaming overbought, both on the 4-hour. Okay. Let's see. All right. At least he comes up with a reason why, and I appreciate somebody actually saying a reason why, right? Because I can easily just go out and say, add an indicator in RSI. Say this. Because he literally says RSI says it's overbought, right? And I am going to say RSI is not extremely overbought, and the averages are down from August, right? And that's on the daily chart. What does it say on the weekly chart? Nope, not overbought on the weekly chart either. So I'm still wondering why he would say RSI, and that's on 7, right? And if you don't know, I tend to use, it's on 14, I tend to use 7, right? If you're using 7, it is, but generally speaking, people use the 14, which it is not overbought. Just thought I'd throw it out, right? At least he has a good opinion of why he thought that, right? And I appreciate somebody actually sharing their opinion on actual data than just saying, hey, it's because of this. All right. Good one, though. I appreciate you, though. In Neos we trust. Yeah. All right. What are your thoughts about CEPI? Well, that's another fund. That's another know what you're getting. I don't know if I'm going to have to go through every single chart for you, but know what you're getting. I think it's a good fund if you know what you're getting. I think Rex does a good job if you know what you're getting. I'm thinking of IRA is heading up with cut rates. Yeah, I think so. I think REITs do better when rates are going down. Total return is much more important than average. Well, depends where you are in your life. It really does. Depends on where you are in your life. Some people don't get it. And I even brought this up. You give me $10,000 back, give you $100,000 back. That sounds like an awesome investment. But your NAV goes down to 9,000. I still have people that will scream, NAV erosion. Guess what? I'm listening. What the hell? You got $109,000 off of a $10,000 investment. And they will say, oh, it doesn't beat SPY. I literally had somebody tell me, it doesn't beat SPY. It's worth 109. But who doesn't beat SPY? So yes, sometimes total returns is more important than NAV erosion. And other times, depending on where you are in your life, it does matter. Right? Eggy, you are really shaking things up. Yeah, I know. They do pretty good. Oh, yeah. Now somebody's going to point it out. Yeah, I changed it for you. I got there. I figured it out. Oh, well, semiconductors are basically beating the market. Yeah. Semiconductors are doing well. And invest in what you know. Do research on it. I have somebody that does research on gold and gold miners. If that's what you know and that's what you want to study, then you probably should have that gut instinct to invest in something like that. If that's what you're spending your time on, right? Do you sell protections for your ETFs or just ride them to Hampton? Well, that's a great question. The last time, I told everybody I sold my growth. I did sell my growth. Now, this time around, I'm going to do something different. Now, do I buy a put or do I go into a different fund? Somebody already said, why QQQ? Maybe you should do some research. If you would have rotated and sold your QQQI and rotated into YQQQ during the last downturn and based it on the 200-day simple moving average and then repart back into QQQI, you would have beaten the market. Did you know that? Probably you didn't. And your income would not have gone down during the downturn. So there it is. So no, last time I wrote it down. This time around, when it crosses the 200, actually there's something else I'm looking at first to know when I should be getting ready to go ahead and hedge. That, no, I don't protect it. But next time, I will protect it. Hopefully that answers your question. Essentially, what is the combined boost? Okay. Essentially, what is combined the boost Neos eat fund for SPY H hedge strategy couldn't get SPY I's yield with downside? Okay. When people ask these types of questions, I have to sit here and think. All right. So if you're going to do this, you're going to have to take the boosted fund and you're going to have to buy puts and do this yourself. If you're comfortable with buying puts, fine, right? You can do it yourself. If you're asking these type of questions, you really need to hire a financial professional. There you have it. Because I am not going to sit here and spend 3 days figuring out for somebody about their fund and their situation. They can essentially go buy a hedge if they want to, right? I don't get it. The new boosted funds are not hedged. Just pop by and say, oh, what did I miss? A whole lot. Brad, thank you for joining these likes. Well, thank you for watching. Another stellar presentation, Brad. Yes. What indicators of hedge in a bull market, Mr. Brad? Well, if it's above the 20, above the 50, above the 200, according to the professionals, it beats all hedging signals. They have it. Now, price goes below the 20, you might go, hey, this is time to buy. You might say, hey, what changed in the market? The 20 goes below the 50, well, now you have something you might have start thinking about hedging. If the price drops below the 200, you definitely should have some type of hedge, right? But by then, we're no longer in a bull market. I will only buy a high percentage. I only buy the high percentage income plays at rock bottom prices anymore. If at all, equities bloated on average. Yeah, I agree. Looking at bottoming out, commodity stock price, book price. Yeah. All right. Rick the farmer is sitting there all day long, not worried about, and I'm not going to. If that's how you choose to invest, you can spend all day and search everything all you want. I'm just going to sit there and go, sounds like you're doing a lot of research and trying to beat the market. And just kind of just say, hey, buy at the right time, buying at a good price. Like I said, my average for QQQI is 7.5% above my cost basis is where it is now. Just throw it out. NEOS ETF Ether. Hope it launches. Yeah, I'm just going to go probably not buying myself. I think just like Farmer Rick brings up price to book and earnings and all this and going back and forth on commodities, you should probably be looking at where is Ether and where is Ether now in the marketplace and looking at, is it a good time to get into Ether and not get into Ether? I think I'm going to wait for Ether to drop before I actually get into it. All right. Don't forget that hit like button for Brad. Appreciate that. And thank you for saying RSI, because that actually gives a true indication of when people should be doing stuff. Because if you think the RSI is the way that when it's overbought, you should be hedging, right? There you have it. It's definitely pointing that you shouldn't be buying. That's a good one. And I appreciate somebody bringing stuff up like that, because not everybody's getting to RSI and looking at indicators. Also, NVIDIA is top holding this. Yeah, it is. If semiconductors crash, then I feel the S&P will crash. Yeah, probably. And if AI crashes, it'll probably bring down the S&P, right? Hey, thanks for all the work. Congratulations. Early retirement. I'm 46. But my 2 weeks notice last week. Wow. Hopefully, things to think about. Health insurance, medical, and where you're going to live. Important things. Greetings from Brazil. Appreciate you. Coming up on an hour and a half. Going to try to create comments here, but others are hard to follow. Have to paste them to ChatGPT and figure out what the questions and comments actually saying. I know, because you're getting into when are you hedging and not hedging, boosted and hedge. Sorry, I meant to. Great. Yes. The US does a great ETF and there's to issue, but there seems like there would be proper combining the best of everything. That's interesting. That's a good comment, because now I think I'm understanding if they did a boosted fund on hedging, that might be a lot more interesting than a 1.5 leveraged fund without downside protection. I mean, Troy is coming onto the channel in 2 weeks, and that is a good question to say to him, because, or a good comment to say to him, because maybe something that is hedged on the downside might be better off in a boosted fund because it does have downside protection. So I get where he's coming from. Sometimes it's trying to figure out where people, I have poor entry discipline. Yeah, no stuff. You're not the only one. Looking for NVY for a while, but looking for, get missed out. I know we all have that. Would you be more comfortable sharing why AIPI wasn't a good fit in your personal investment? Yeah, okay, sure. So AIPI, when I started looking at it, did not recover as well as GPTY, right, in how they actually did. So I was looking at that and I compared it to FEPI. Now, GPTY is still not as big as what my AIPI holding was actually ever at. Let's keep that in mind. So, yeah, AIPI, right? And I still think it's a good fund, right? And GPTY, if you got in a good cost basis, right? But let's go like this. I look at this going, huh, which fund do you want to own? I'm going to own GPTY. And I made my switch way back here. Right? So I did a whole lot better switching out from AIPI to GPTY, because I can look at that on a total returns chart and say, I also didn't like that AIPI. I'm going to write calls 2 to 5% out of the money every single month, and I'm only going to do this, and this is all I'm going to do. I'm not going to change my option strategy. I'm not going to do anything different. I'm going to just do this. Where GPTY has 6 different strategies. I want to say 6 different option strategies at their will that they can apply in different market strategies. And that gets you into the whole way of these funds now. Funds, revision 2 funds, right? I mean, literally look at Neo's coming out writing calls, put spreads instead of longer dated calls. Everybody's going to different strategies and not holding themselves to one strategy. If you look at blocks, look at blocks. Go read the prospectus. They have every single option trading strategy as ULTY. Every single one of them in their prospectus. They're all in there. They're all in there. So you sit back and go, why do these funds now only going to, I'm only going to do a longer dated call? Oh, okay. Well, we should have done this. We would have performed better if we would have done that. So I'm really looking for the funds that give the fund managers that room to actually change. They have it, right? And looking at the chart, it clearly does better, right? Apple, yeah, and Microsoft, yeah. So Microsoft, that's a good one, because Microsoft, their ownership in ChatGPT is a lot more than what I think people realize. AVGO is now the top 5% of the S&P. How about that, right? So it's on my list. It's on my list to have. Amazon, yep, yeah, they're all into that. So, and this is the last one. Do you ever get a free Blocks hat. Yes, I do have a Blocks hat. David is coming onto the channel Monday. We're going to do a pre-recording, and it's all about. And I know that a lot of people won't like it, because what we will be talking about is, when do you stop doing your own investments and turn it over to a financial advisor? There you have it. When do you actually take the time and say, I no longer want to manage this myself. I am going to turn it over to someone else to manage it for me? And what questions should you be asking those people when you turn it over to them? That is the comment of the day, because you may want to turn it over to some financial professional, because when you're 70, you might not want to be managing your own funds. My mom doesn't manage her own, right? When I turn 70, I might not want to manage my own stuff, right? So that's questions you should ask, right? I don't trust anyone with my money except for me. Okay, when you turn 90 and you think you might not have the mental capability, you might want to rethink that conversation, because that is when it really comes up. I don't think everybody realizes that when I'm talking to everybody, I have viewers that are in their 90s, and I have viewers that probably, look at the statistics, are in their 30s. But most of them are in their 40s to 60 range. Just keep that in mind of who's out there. Oh, do you still have your cash in stock? Yes, I do. I do. Yeah. Farmer Rick got it. Wow. Yeah. Exactly. Mental capabilities. All right. I'm telling you, I'm slipping, and I'm only in my late 50s. Right. You know, at 70, Brad, you'll be on CNBC. At 70, personal opinion, I'd like to be living in the desert where it's nice and warm during the winter times and nice and cool in the winter times. That's what I'm hoping to do, and I don't want to be on CNBC. So, hey, I greatly appreciate it. There's a lot of viewers that are still following. I'm going to go back and look at these and make sure I get them reversed right, and hopefully you guys got something out of this. I think everybody is on their own adventure in investing. I'm only 21. I get it. I got a lot of younger viewers. So tomorrow when I bring David on, it's not for the 21-year-olds. I think you guys can do your own stuff. But when you reach a certain age and you're in retirement, you might not want to continue to do it yourself. You may want to turn it over to somebody. And David will tell us what questions we should be asking those financial advisors when we turn it over. So until next time, God bless.